So our baseline prediction is that we'll top $200,000 this year.
Oh, okay.
And I think we're on track for that. Yeah. And the reason for that is we just look at the supply and demand, right? There is only 165,000 new Bitcoin produced every year. That's it.
Yeah.
Last year, ETFs bought 500,000 Bitcoin. I think they're going to do it again. That number's bigger than this number, and that means the price has to go up until people sell. And Bitcoin's been very resilient while the rest of the world has been a little bit crazy, right? We've been outperforming the stock market. I think as the world normalizes, I think we're getting to 200,000 and maybe more by the end of this year. I think, Bitcoin alone has another 10x in it over the next, 5 or so years. So I think this market is just at the inflection point of growth. And if that's right, there's going to be plenty of billions of dollars in ETFs for BlackRock and for Bitwise.
Matt Hougan raises an interesting topic regarding the perception of Bitcoin among investors. The market capitalization of Bitcoin is approximately $2 trillion, or 2% of all investable assets worldwide, compared to the more than $100 trillion value of the global equity market today. Accordingly, you are not neutral if you have no Bitcoin. Rather, you are essentially placing a wager that it will crash. Holding approximately 2% would be considered true neutrality. Additionally, according to Hougan, most investors should aim for allocations of as much as 5% if they are positive. His main point is straightforward yet impactful. Zero is not neutral. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Allocate 10% towards Bitcoin, or like what percentage would you recommend?
I mean, the most important thing is that zero is wrong, right? If you look at all the stocks in the world, the global equity market, where your doctor or your dentist is investing, that's a $100 trillion market. Bitcoin's a $2 trillion market. What that means is if you want to just be neutral, like if you don't have a view, pro-Bitcoin, anti-Bitcoin, you should be at 2%. That's the neutral starting point. What your doctor is saying is, I'm anti-Bitcoin. I want to be off the world's benchmark. I think Ray Dalio is wrong. I think 9 of the 10 largest hedge funds are wrong. I think Stan Druckenmiller is wrong. I think Bitcoin is going down. If he wants to say that, being at zero is saying that. If he wants to be neutral, we're talking 2%. I think many investors are well served by a 5% allocation to Bitcoin. That's enough to give you upside exposure without making it so volatile that you can't sleep at night, right? If you have a 5% exposure and Bitcoin falls 50%, which it has in the past, you've lost 2.5% of your money. S&P 500 can go down 2.5% in a few hours, right? And we don't blink an eye. So I think 5% is a good place for many people to be. 2% if you have no opinion, but zero is really off benchmark. It's off what the world is saying this asset class is. I don't think that's acceptable for most people. I do think, for what it's worth, that is surprising to people. When you put Bitcoin in a portfolio, Bitcoin itself is very volatile. But at 5%, your overall portfolio volatility doesn't change very much, right? I think people have this idea that they put a little bit of Bitcoin in, like, whoa, it'll be crazy. But guess what? If you put 5% Bitcoin in, you could lose 5%. That's it, right? That's the way the math works. It'd be $1 trillion of new buying. $1 trillion, which does not mean the price goes up $1 trillion, right? That's $1 trillion
coming in
and having to buy it from people who already own it. And there are various studies on what that means for price, and they're pretty imprecise. But the easiest way to think of it is the price has to go up.
It has to go up.
$1 trillion is a lot of money. I say this all the time. 95% of all Bitcoin is already owned by someone. There's only 5% left to mine.
Which is scary for me.
It is. But 95% of investors don't have any Bitcoin, right? 95% of the world's largest investors haven't yet allocated, and they have to. And those are going to hit, right? Those are going to hit because those people who haven't invested want to invest. They got to get to 2% just to be neutral. And where's all the Bitcoin going to come from?
It's going to come from the people who have it right now.
That's exactly right. So our baseline prediction is that we'll top $200,000 this year.
Oh, okay.
And I think we're on track for that. Yeah. And the reason for that is we just look at the supply and demand, right? There is only 165,000 new Bitcoin produced every year. That's it.
Yeah.
Last year, ETFs bought 500,000 Bitcoin. I think they're going to do it again. That number's bigger than this number, and that means the price has to go up until people sell. And Bitcoin's been very resilient while the rest of the world has been a little bit crazy, right? We've been outperforming the stock market. I think as the world normalizes, I think we're getting to 200,000 and maybe more by the end of this year. Here's the thing I don't think people understand. They're extraordinarily bullish on Bitcoin specifically right now. we're here at Consensus. The vibe is pretty bullish. I would say that the vibe at the conference I just went to, the TradFi conference, was more bullish on Bitcoin than it is right here. They have 0% exposure. They know they need to get exposure. They know that institutions have a huge amount of money and all of their friends need to get exposure. So they see the amount of demand coming into the market. And yeah, I think the institutional bull wave in Bitcoin is going to continue for multiple years. I think it's just getting started. They're very bullish about the space.
Hougan also makes the important point that there is only one path forward for regulatory reform. Bitcoin ETFs won't disappear after they've been authorized. Banks won't abruptly stop providing crypto custody once they begin. The industry as a whole grows safer, more transparent, and more legitimate as regulators continue to establish guidelines for how tokens are listed, how institutions deal with cryptocurrency, and how custody operates. This momentum is unlikely to be reversed, not even by changes in political leadership. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
And what do you think it'll be 10, 20 years from now?
Oh, it's going to be massive. I mean, look, I think crypto's on its way to be a $30 trillion industry. And I think ETFs will be a massive part of that. Yeah, absolutely. Easy.
Yeah, that's a 10x from what it is now.
It's easy. Yeah, it's a 10x from where it is now. And that's probably conservative. I think, Bitcoin alone has another 10x in it over the next, 5 or so years. So I think this market is just at the inflection point of growth. And if that's right, there's going to be plenty of billions of dollars in ETFs for BlackRock and for Bitwise.
How do institutions get exposure? By funds or spot?
Yeah,
what would you recommend?
Mostly through ETFs. And the reason for that is that their sort of portfolio management systems aren't built to deal with spot BTC.
Okay, got it.
So they understand the value of self-sovereignty and holding your own keys, but they just can't legally or simply do it. So the ETF makes it very easy. All the ETF is a wrapper. When someone invests in my ETF, we have money come in, we go out and buy Bitcoin and put it in cold storage. It's as simple as that. And so they're using this wrapper of the ETF because it fits in their workflow, right? They don't need a separate account. They don't need to worry about having their seed phrase. They can just buy the ETF. It makes it easy. Right. And what we're going to see is they're going to have some of their assets in ETFs and some of it they're going to hold their own. There's actually a great, I come from the ETF space. Before I was at Bitwise, I was the CEO of ETF.com. I spent 15 years in that market.
So this is your life.
This is my life. But there's a great analogy. When the gold ETFs launched in 2004, people said, oh, people will stop holding gold bars. They'll just hold this ETF. And what we saw is the ETFs grew enormously. They grew to be $100+ billion in assets. And the number of people who held gold directly in bars or coins or whatever grew as well, because the ETF legitimized it as an asset class, and people said, I want some of it in this financial wrapper, and I want some of it myself. The same thing will happen in Bitcoin. ETFs are expanding the pie for people who can invest in Bitcoin. And of course, some of them will then want to hold it directly, and they'll want to participate in DeFi. I think about most of the people listening to this. I guess a good fraction of them bought their first Bitcoin on a centralized exchange, right? And then they learned about self-sovereign storage and holding your own keys, right? And that's the same thing with the ETF. It makes it easy, and then some portion of the people will want to hold it directly. And I think that's a beautiful thing. I think it's a risk worth considering, and the short answer is we don't know, but I have a feeling that this is a one-way train, right? As an example, we got Bitcoin ETFs in 2024. We're going to have Bitcoin ETFs forever.
Forever, yeah.
Right? The SEC is moving forward on market structure work, like how do tokens list? What is the regulatory framework around Bitcoin? Can banks touch Bitcoin? I think once that happens, we're not going to go back. If the large financial institutions like Bank of New York and JP Morgan and Bank of America have crypto custody businesses, the next administration isn't going to be able to unwind that. So I think the bet we're making in crypto is we make enough progress during this administration that whatever happens next, it won't be able to be unwound. It'll prove that it just helps investors be more safe and secure. Right. The thing about Fidelity is it's actually a family-owned firm. It's not a publicly traded company. So the founder of the firm is very pro-Bitcoin, and she just said, we're going to do this, right? Yeah. Whereas if you're at a large publicly traded financial entity, if you're at RBC or you're at Bank of New York, you have to worry much more about the regulatory environment and the risks there. But that regulatory risk is diminishing every day, right? In the US, we have a pro-crypto SEC. I think pro-crypto regulators are taking over globally. And as that risk comes down, you're absolutely going to see all these banks start to custody crypto, start to offer direct trading of things like Bitcoin. This is a one-way train.
According to Hougan, Bitcoin ETFs are growing the market as a whole rather than taking the place of direct Bitcoin ownership. He compares that to what transpired with gold. Many individuals believed that gold bars and coins would become less popular when gold ETFs were introduced in 2004. Rather, ETFs expanded significantly, and more people simultaneously started holding actual gold. People desired exposure to gold in both financial and physical forms, and the ETF legitimized gold as an asset class. Hougan anticipates Bitcoin will be no different. ETFs facilitate the entry of new investors, and after they feel at ease, some of them will wish to engage in DeFi or directly hold their own Bitcoin. ETFs provide access, and self-custody continues to expand. Additionally, he stresses that regulatory advancement is a one-way train. No future administration is likely to undo the SEC's approval of Bitcoin ETFs once banks like JP Morgan or Bank of America start providing custody and trading services. The ecosystem becomes safer, more open, and more widely used with each new regulation and service. Hougan concludes by emphasizing that there is ample space for several companies in this rapidly expanding sector. Although Bitwise is a cryptocurrency native and even provides a portion of its ETF fees to Bitcoin core devs, BlackRock may have the most well-known brand. We're still in the early stages of growth, so it's not yet a zero-sum game. In his opinion, everyone is trying to increase their share of the pie. When the market is substantially bigger, there will be real competition. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.